Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of business and finance. And today we've got a filing that's got some serious brand power at its heart. Looks like someone's been busy acquiring some very popular names in the industry. So what's going on here? Well, it seems like Agrify Corporation has made a pretty big move. They're essentially buying up the intellectual property for a bunch of popular brands like recipes that people recognize and want. Now, usually when a company makes a big acquisition like this, they have to file all sorts of detailed financial reports. But here's a little twist. Agrify is saying that this particular acquisition doesn't count as buying a business in the eyes of the regulators. So they're not having to file those super detailed financial statements right now. That's definitely an interesting way to handle disclosure. Let's talk about the money though, because that's always where the real juice is. Agrify paid a hefty $50 million for these brands. That's a significant chunk of change. And get this, Green Thumb Industries, which is a major player in the cannabis space, already owns a pretty substantial piece of Agrify. That's a lot of overlapping influence and ownership, and it definitely makes you wonder about the strategic direction and potential conflicts of interest. And on top of that acquisition, Agrify also issued $50 million worth of new convertible notes. These notes are essentially loans that can be turned into stock later. A big chunk of these notes went to RSLGH LLC, another subsidiary of Green Thumb. These notes are due in early 2027 and carry a 10% interest rate. The company can pay this interest in cash, stock, or even warrants, which are like options to buy stock. Speaking of warrants, if they do issue these pre-funded warrants to pay interest, some of them will have a limit of 49.9% ownership for RSLGH and a smaller 4.99% limit for other investors. This is all to comply with stock exchange rules, especially when it comes to how much stock one entity can hold without triggering certain ownership thresholds. It's also important to note that Agrify made some adjustments to their existing convertible notes. They've essentially made sure that these new notes rank equally with their older notes from November 2024 and May 2025. This is a common practice to ensure all lenders are on the same footing in case of any financial trouble. Now, here's where things get really interesting. Following the big acquisition, Agrify's new subsidiary VCP entered into a license agreement with GTI Corp, also a Green Thumb subsidiary. Basically, Agrify is licensing these acquired brands back to Green Thumb to use in their existing businesses. They'll pay a monthly fee based on sales of products using these brands. This is a pretty standard move after an acquisition like this. They also amended an existing license agreement related to the Incredibles brand. The main change here is that they're limiting Green Thumb's ability to split these rights to other companies and preventing them from terminating the agreement until 5 years after it started. This shows Agrify wants to control how these valuable brands are used. Scroll them eins have teas. But the biggest news for Agrify's future is that they're changing their name. They're officially changing their company name from Agrify Corporation to RYTHM. That makes a lot of sense given that they just bought the RYTHM brand and all the other associated brands. They're also changing their stock ticker symbol from AGFY to ARM. This is a pretty bold move, signaling a complete rebranding and a refocusing of their identity around these acquired brands. It's like they're saying this acquisition is the new face of the company. Scroll off our page in Tech T DAR file and banded within the Intengi XBRL document. Let's try to get a quick look at some financial numbers if we can find them amidst all this brand buying and rebranding. While they've cleverly sidestepped filing detailed financials for the acquisition itself, the issuance of these new convertible notes and the amendments to existing ones definitely paint a picture. They're raising capital through debt, which isn't unusual, but it shows they are leveraging external funding for these strategic moves. The $50 million purchase price for the brands and the $50 million issuance of notes suggest a significant financials for the acquisition itself. The issuance of these new convertible notes and the amendments to existing ones definitely paint a picture. They're raising capital through debt, which isn't unusual, but it shows they are leveraging external funding for these strategic moves. The $50 million purchase price for the brands and the $50 million issuance of notes suggest a significant financial maneuver is underway. Scrolls Truce Agreement. Dated August 27, 2025, by and between VCP 23 LLC and Agrify Confentisial Mans. When we dissect these agreements, like the purchase agreement and the license agreements, we see a clear strategy. Agrify is acquiring the core intellectual property of these successful brands, hoping to leverage them across their own operations and through licensing. The fact that they are allowing GTI Core to use these brands through a license agreement indicates a collaborative approach, but also a way to generate immediate revenue from the acquired assets. Looking at the company's direction, Agrify seems to be making a significant pivot towards brand ownership and management. By acquiring these well-known names, they are essentially buying market recognition and customer loyalty. The name change to RYTHM Inc. solidifies this new direction. This strategy can be very powerful if they can effectively integrate and market these brands. However, it also carries risks, especially if the market for these specific brands doesn't perform as expected or if competition intensifies. One notable risk is the heavy reliance on debt financing for these acquisitions. While issuing convertible notes is a common way to raise funds, it increases the company's leverage. If Agrify's performance doesn't keep pace with its debt obligations, it could face financial strain. Another point to consider is the close relationship with Green Thumb Industries. While this can provide strategic advantages and access to capital, it also raises questions about independent decision making and potential conflicts of interest that we already touched upon. Ensuring transparency and fair dealing among these affiliated entities will be crucial for investor confidence. In conclusion, Agrify's move to acquire these popular cannabis brands and rebrand as RYTHM Inc. is an ambitious strategy. It's a clear bet on the power of brand recognition in a growing market. The financial maneuvers involved are significant, but the lack of detailed financial disclosures for the acquisition itself leaves some questions unanswered about the true financial health and integration plan. We'll be watching closely to see if this brand-centric strategy pays off, and if the company can manage its increased debt effectively. Alright, that's our breakdown of Agrify's latest filing. What's your take on these brand acquisitions and the name change? Do you think it's a smart move or a risky gamble? Let us know your thoughts in the comments below. Remember, if you found this deep dive valuable, give us a thumbs up. It really helps us out, and definitely subscribe so you don't miss our future corporate breakdowns. Also, join our Discord community link in the description for even more insights and discussions. Thanks for watching, and we'll see you in the next one.